what happened with the Nike earnings is more of a shift in consumption as opposed to, any big change in consumption trends. I mean, if you look at it, you saw 83%, growth in digital, which is great. But as Bob mentioned, the brick and mortar business is actually slowing. So what you just saw was an overall shift. I think total revenues for Nike overall were actually down a little bit. So, when you're talking about the retail space overall, I think it was more of a mixed message, whereas for Nike, it was a positive because they're essentially cutting out the middleman. So, there's some good and some bad, but overall for retail, I'd say it's more of a mixed takeaway.
So speaking of that mixed takeaway, is this consumer strength something you see continuing throughout the holiday season? And what sectors besides retail do you see benefiting from this big shift to e-commerce?
Yeah, Frank, I think here it's a really tricky time for the consumer. Clearly, with the benefit of hindsight, you can look back at the last, 6 months or so, and it's obvious that consumer was a great way to play the recovery because that's where the stimulus was concentrated. I mean, if you go back to April, household incomes back in April were up 17% year over year. But now the trouble going forward is, clearly, that stimulus is slowed, and as a result, that income is slowed. So going forward, especially as we get the next fall off in the unemployment benefits, the question is the consumer going to be able to remain as resilient going into the holiday season? I think that's really tough given the state of the economy today and how fast incomes are going to fall from here.
So, Dan, stocks near session lows. We're seeing a big sell-off in tech. What's your take on that?
Yeah, I actually think, conversely, if you think about, what I was just describing, a sell-off in tech relative to, outperforming other parts of the economy, I actually think that's quite bullish. I mean, if you think about it, this is very similar to the typical growth value argument. You want to buy growth when growth becomes scarce, when growth is slowing. But if you are going to have a sustainable recovery from here, then what you want to buy is clearly the stuff that's levered to the recovery. So, tech stocks have done phenomenally well this year. A lot of those stocks actually accelerated during the pandemic. But if you think that this recovery is going to broaden out, which I think there's a lot of questions there, if it is going to broaden out, then you probably want to own some of the stuff that's beaten down and levered to the recovery. We think that there's a couple ways to play that. Stuff that's sort of, beaten down, out of favor, yet, will do very well in the recovery, like, say, materials. But otherwise, if you want to own stuff that's, a steady, more of a steady recovery story, I think shipping and transports companies. I mean, just think about the Nike takeaway. I think, arguably this move to online is more bullish for FedEx and UPS than it is for Nike itself.